Well, good morning and welcome to Tampa Home Talk. I am not Tampa real estate gal Katrina Madewell, but I am Adam Talley with Talley Insurance, joined by none other than
Leo Kane with Barrel Engineering and Inspection.
And Leo, today we have Robert Geller in here. He's a Tampa bankruptcy law he's the owner of Tampa Bankruptcy Law Firm, and we're going to be talking all about debt resolution, surprising facts about bankruptcy, and what happens next. Welcome, Robert.
Good morning, and how are you today?
Doing pretty good. I'm excited to learn all about bankruptcy. I think it's kind of a good juxtaposition with what we talked about last hour with
it was kind of funny.
1031s.
It was like the opposite ends of the spectrum. Actually, I think they're very related. I think in both areas we're trying to protect the money.
I agree.
In this case, with bankruptcy, we're trying to protect what little money you have left. And with the 1031 exchange, you're trying to protect the big, I always call it a briefcase worth of money. Mm-hmm. Or like the pillowcase with the money with the big S and the two lines.
Oh, yeah.
Trying to protect that.
Like an old-timey bank robber.
Yeah, so I understand, Robert, you're a graduate at the University of Florida with the College of Law.
Nobody's perfect. It's okay. Go Noles. It's almost football season, so we got to get ready for that.
I'm so glad my college had no sports team.
All right.
After graduation, you practiced personal injury law. So how do you make the jump from personal injury law to bankruptcy?
Well, I moved from Gainesville, practiced up there for 6 years, and met my wife up there, and decided that Gainesville was getting smaller, and I decided that I needed to find a new place to live, so I moved to Tampa. First started looking for employment, but then I went on my own and started taking on bankruptcy cases. Other attorneys started referring them over to me, and started realizing that I could really help people and really improve their life and take the gorilla off their back, so to speak. And I've been doing it since 1991, and it's been a very rewarding thing for me. It's really nice to see how I can help people turn around their lives and their debt. Deal with their debt.
So do you stay in the personal injury arena? Maybe go after those creditors that are harassing you at 3 a.m. Things of that.
We do that as well. Yes, that's actually, I would say, kind of one of the more fun things I get to do. I'm also an avid fisherman, but I got to tell you the truth that sometimes it's more fun turning the table on a creditor, going after somebody and making their life miserable. A creditor turning the table on those creditors and putting a check in my clients' pockets for the harassment they're doing.
Oh, that's awesome. Now, it says you're board certified in consumer bankruptcy law, so kind of dive into that. So
what does that mean? That I'm to become board certified, you have to have a certain amount of experience in the field. You have to handle a certain amount of adversarial cases. You have to take exams. You have to get recommendations from others and those kinds of things. And that's, I guess, the certification I've had for about 10 or so, maybe more years. And
what's an adversarial case? I mean, I think back to my Dungeons and Dragons days. So.
Well, anything that's contested in bankruptcy court. So sometimes, a creditor will object to you getting a discharge if you've been and it doesn't happen very often, but sometimes people go on a spending spree right before filing bankruptcy and want to get rid of the debt, know they're filing bankruptcy. Creditors can object, and that's an adversarial action. An adversarial action also the debtor can bring. The person who's filing the bankruptcy, they can sue the creditors, like I said, for harassing them or calling them after they got their bankruptcy discharge. Discharge means that they don't owe the debt, and the creditors cannot come after them, but sometimes creditors don't get it. And sometimes we have to remind them that they're supposed to behave themselves.
Now, do you see that a lot where people just go on wild spending sprees and then they want to file bankruptcy? I mean, that doesn't seem right, does it?
You know, like I said, I've been doing this for 28 years. It's kind of rare.
You've probably seen it all.
Once in a while, there's somebody who's come in my office who, decided to go out and buy a car and a credit card. Or
they even let you do that?
Well, they don't let you do that. You're not supposed to do that. Normally, I throw those people out of my office. But you can't do that. No. You can't go, load up on your credit cards right before filing bankruptcy knowing you're going to do that. That's a bad thing, and you can get in trouble for doing that kind of thing. So,
good.
Yeah,
That's good to hear. Now, it says you mainly handle Chapter 7 and Chapter 13 cases.
Right.
I think Chapter 7, it sounds familiar. I don't think I know specifically what that is. And Chapter 13, I definitely don't know what it is.
I would think the second segment can just be completely diving into the difference between 7, 9, 11, and 13, because these are numbers we're all familiar with but know nothing about. And I think that's a great lead-in for the second segment, to just really go in depth on the difference between the 7 and the 13.
Okay.
I can do that.
Yeah. But I guess my first question would be, how do I even know if I'm eligible for bankruptcy?
That's a very good question. But it's really takes some experience to be able to answer it. Usually if you're having trouble paying your bills, you don't have enough income coming in, you've been trying for a while, it's always a good idea to talk to an experienced attorney to at least give you the information that you can, so that you don't wait too long to maybe. And I've seen this happen where people wait too long to file bankruptcy. I think I've done some videos on that, but I think one of the biggest mistakes is that people are waiting too long, at least to consult an attorney about it. They deplete their retirement, and they do everything that they can to try and save themselves. And most people are good natured and try and do the right thing. But sometimes they wait too long, and they shouldn't have depleted their retirement, because that's their nest egg and that's their future. So they should come in to see an attorney. They should help evaluate what their income is, what their debts are, what their assets are. And there's an analysis based on how much money you make per year to determine whether you're eligible to file a Chapter 7. Or if you have too much in income or assets, you might need to file a Chapter 13. Or the other thing, and we talked a little bit about the differences of bankruptcies, Chapter 7s and 13s, is people get way behind on their home, and they're, again, depleting their assets, and maybe a Chapter 13 would be a good example, a good thing to do. So,
well, now we've just kind of piqued the interest of all the listeners.
Yeah.
As I tried. Adam wanted to dive into it.
Yep.
I wanted to save it. You dove into it. What's the difference between a 7 and a 13?
Well, I think the biggest difference is a 7 basically gets you a discharge of your debts in a period of 3 months, 90 days. And Chapter 7 is usually available for, I won't say lower income, but income is a determinative factor.
Is there a threshold that you have to be at?
Yeah. It depends on how many people are in a household, but generally,
like taxes, like a sliding scale type of thing.
Well, yeah. So it's if we're an individual, it's roughly $50,000 or less. You could make more, and I have filed Chapter 7s for people making $100,000, but there's an income threshold. But generally, you're filing a Chapter 7 just to get rid of your debts. Usually, in most situations, you can still keep your assets. And the main reason we file Chapter 13 is for people who are not eligible for a Chapter 7 because maybe they make too much income, or maybe they have too much in assets. But the biggest number one reason I think for a 13 is somebody who's way behind on their mortgage, and they're trying to save their home. They lost their job. They've been out of work. They were out of work for 6 months, and they now they get back to work. There's a foreclosure sale scheduled. Through Chapter 13, you have a period of up to 5 years to catch up on mortgage payments. So that's the number one reason.
So that could be a huge tool to avoid.
Correct. And you can also get mortgage modifications through Chapter 13. So those are the major differences. So 13 is really designed for people who are not eligible for a 7, or have too much income and assets, or maybe are trying to save their home. Sometimes also a 13 is filed for people to deal with certain tax liability. Those are the big differences. Chapter 7 gets you that discharge in 90 days and begin to get the fresh start right away.
Wow. Okay.
I'm a lot less confused. I mean, I
that's
hear
the nutshell version.
I hear the numbers all the time, and I just always get confused over what they mean and what they actually mean at the end of the day. But we'll talk more with Robert Geller when we come back from our break, which we're coming up on in the next 30 seconds. He's with the law offices of Robert Geller. He's a Tampa bankruptcy law firm owner. So we're dealing with the big guns. If you want to file bankruptcy or learn more information about a consultation, text bankrupt to 813-377-2775. That's text bankrupt to 813-377-2775. And it's pretty easy to spell, interrupt.
I like it.
Yeah, you don't have to put the space in there. So we'll be right back. This is Leo Kane with Adam Talley and Robert Geller. You listen to Tampa Home Talk. We'll be right back after the break.
Welcome back to Tampa. Leo Kane with Barrel Project Engineering and Inspection, and today we are joined by Robert Geller with the law offices of Robert M. Geller, and he is a Tampa bankruptcy law firm owner here. Now, before we were talking about the different types of bankruptcy, and just real quick, kind of refresh our listeners, what are some of the signs that they might want to look for in their own life before they...
Well, I think that if if you're going to the mailbox and you're getting a credit card bill after credit card bill, and you're just paying the minimum balances, and you're really seeing that the balances are really going up, you're just making minimum payments. You're sitting down in your lounge chair, turning on the tube, and the phone's blowing up. The creditors are calling, asking for payments or when you're going to make payments, and you can't make payments. The process server's knocking on your door and handing you a lawsuit.
Sounds like a pretty popular person. None of that happens around my house.
So, yeah.
Well, and even worse, you're getting a call from your HR department. You get served with a wage garnishment. That's probably a good time to come see a bankruptcy lawyer.
Yeah, I would say if your wages are getting garnished, that's definitely a good time. Do you see when you see people with all these credit card bills coming in? Is it usually, it can't be just one, right? Or they usually have 3, 4, 5? What does that typically look like?
No, most people have more than one debt, and usually it's at least 5, 6 credit card bills. Or, some people file bankruptcies for other reasons, just other than credit card bills. I mean, some people, unfortunately, and a lot of honest people, I say, they have, a lot of medical bills. They're wiped out on medical bills, even though they have insurance. There's not enough. There's co-pays and stuff like that, and they're stuck. The hospital suing them.
Well, and depending on what it is, it doesn't matter how much money you make, you can't foot those bills.
You're right.
Right?
You're right. I mean, it's a very valid reason to file bankruptcy. It's it can unfortunately happen to anybody.
Oh yeah.
Adam and Leo, I've got a question for our guest. What about, you see these advertisements on television all the time that said if you're drowning in bills, that the creditors will settle for pennies on the dollar. So say you owe $5,000. Is that true that they might settle for $800?
There's a lot of so-called debt resolution companies out there that make those kinds of representations. And what I see, I can only tell you what I see, is a lot of people come in my office. They've been paying a year or so to a debt resolution company. The debt resolution company's banking the money, and they're taking their fees up front. And then what happens is, 6 months to a year down the road, one of the creditors says, I don't like this, I don't want to do this. And the client comes in my office with the lawsuit in their hand, and they call the company, and the company says, well, we really can't help you with that. You really got to go talk to a lawyer. And so, then they're down $5,000. And or so,
makes the situation
and then
worse, doesn't it?
They would have been better off coming in my office a year ago, where maybe I could have filed a Chapter 7 for them right away. I think sometimes creditors will negotiate with you. I'm not going to say it's pennies on the dollar. From my experience, it's usually a substantial percentage of the debt. So that's kind of what I see.
Okay, that kind of brings up my next question. And I'm sure people have a lot of. They probably come in with a lot of questions. What do I get to keep? What can we negotiate? Tell me about somebody's house. How does that work? Right?
Yeah. So in Florida, you are allowed to keep your home if you file bankruptcy. Your home is exempt. It's homestead. It doesn't matter how much your house is worth. You could have a $10 million house and file a Chapter 7 bankruptcy, with certain exceptions, of course. You know, if you move from another state which doesn't have such liberal exemptions the month before, and you bought that house cash, then maybe you wouldn't be able to exempt it. But if it's been a relatively legitimate thing and you have a lot of equity in your home, no, that home is completely exempt. And so you can keep it whether you file Chapter 7 or Chapter 13. That's completely protected. And Florida is one of the few states that completely exempts the entire homestead. There are other states in the country that you're limited to $15,000 or so, and that creates a bigger problem. Now, on the other hand, Florida is pretty limited on some of your personal property. So depending on how much personal property you have, you may have to pay the Chapter 7 trustee to keep that personal property, although in most cases the exemptions still work out pretty well for people, and they could still file a Chapter 7 because most people, truthfully, in the end of the day, their personal stuff isn't worth a whole lot of money because it's relatively yard sale value, and it's old furniture that the dog's been on or the kid's been on, and it's just not worth a whole lot. So
let's run through the. Go ahead, Pat.
What about this? That you know you're drowning in debt, and you know that you want to call somebody and file bankruptcy. So what you start doing, you're going to keep your home, but you have an RV, you have a boat, you might have a condominium somewhere else, and you start putting that in like a family member's name or somebody else's name. How does that work? Well,
you can't do that.
It's called cheating.
You can't. Well, first of all, I think we have to talk about two things. One is if it's an RV and if you have no equity in it, it's worth $50,000 and you owe $100,000, then yeah, I guess you can keep it if you want to continue to pay for it. But if
you own it outright, right, and you've given it to your sister,
right,
and now it's in her name.
Well, you have to disclose any transfers of any assets that you have within 2 years of filing the bankruptcy. So if you've transferred your RV or your boat to your sister within that 2-year period of time, that has to be in your bankruptcy schedules. And then the Chapter 7 trustee basically has the right to take that asset back. So those kinds of things you can't do.
Even legal bill of sale, but it was $10 that she paid me for it.
Even legal bill of sale, no. It has to be an arm's length transaction, and they're not. The trustees are not stupid. They can. They'll want to see the documentation. They want to see, that you actually, paid the money, and if the RV is worth $50,000, if your sister paid you $50,000, and there's records of it, that's fine. But no, you can't sell it to your sister for $2.
Do you have any stories of anything where somebody really tried to hide something before that they got caught, but it was ingenious?
I have seen a lot of things. I had a lady who I don't, I got to be careful about
absolutely.
Talking about. Let me talk about another person I saw in court. Let me say it that way, who wasn't my client.
That's perfect.
I was in court once, and it was a couple who was testifying at their 341 meeting that they didn't have any assets or personal property. I think it was in Puerto Rico, and while the court case was going on, that was called a 341 meeting, the Chapter 7 trustee, who was a person appointed by the court, basically pulled out some deeds of property they had in Puerto Rico, and these people just decided not to disclose that. That can get some people in some serious problems. There have been there's a lot of times that people get thrown under the bus in court by maybe their ex-spouse or a disgruntled employee, where I've seen, not disclosing a very expensive piece of jewelry, and they show up to court that day and they say, "Oh, what about the Rolex that you were wearing, you used to wear, and what happened to that? And those kinds of things happen.
They'll even talk to employees if you own a business, and
Well,
and
it's
get
not
some
so
dirt
much
on you that, or the employees seek out a way to.
It would be like the disgruntled ex-wife who's mad at
gotcha.
the person who filed bankruptcy, or maybe the disgruntled ex-employee who wants to nothing else than to get revenge or get even.
Is that commonplace?
It's not common. No,
Okay.
no.
Okay.
No. I think most people are honest and good-hearted
Just trying
people.
to not keep digging that hole. Basically,
Adam wanted ripped from the headlines here. Ripped from the headlines.
But it does happen, and those are crimes. And when our office goes through, prepares a client, we go through all their information. We ask those questions about transfers. We discuss their assets with them. We ask them about significant assets. We explain those kinds of things over and over again to them. So we try and make sure that those kinds of things don't happen.
Yeah.
But sometimes people think that they know better and they're going to do the wrong thing, and
awesome.
they get into trouble.
Well, when we come back, I have a lot more questions. You're also an author, so we need to
have a
talk about your
book.
book a little bit too when we come back. So you're listening to Tampa Home Talk. If you have any questions, text Bankruptcy to 813-377-2775. You can call or text 813-377-2775. We'll get you connected with Robert. Thank you so much, and we'll be back shortly.
Yeah, we'll be back right after the break. 813-377-2775. You're listening to Tampa Home Talk. This is Leo Kane, Adam Talley, Robert Geller. Exciting hour on what to do when you need to file bankruptcy and you want to keep your house, your car.
You can keep your car, absolutely. We can get to that too.
And welcome back to Tampa Home Talk. This is Adam Talley with Talley Insurance with your 2-minute tip of the week for the 9 o'clock hour. And since we're talking about bankruptcies, one of the other things that I see, at least on the insurance side, is sometimes people will neglect their homeowner's insurance. And then all of a sudden, now the mortgage company puts on forced place insurance. Now that insurance usually...
Oh, that's expensive.
It's expensive. It's usually twice the cost. People don't understand it doesn't protect any of their own stuff, doesn't protect them. It only protects the mortgage company. And their house is probably insurable. So, if you're in a situation like that where you have forced place insurance, give us a call. I'd love to talk to you, show you some options that you have, and get you out of that nightmare that can be.
813-377-2775. That's 813-377-2775. That forced placed insurance is just criminal.
Yeah.
That's a big problem for a lot of my Chapter 13 clients. Because they don't have that insurance, and the mortgage company places it. Like you said, it's like 3 times as much as regular homeowners insurance. And what happens is it blows up their payment that they pay to the Chapter 13 for catching up their mortgage. So let's just say, hypothetically, they're paying $1,500 a month, $1,000 a month for the mortgage, $500 to catch up. But then the mortgage company gets that forced place insurance. Well, then the mortgage company files a motion with the court asking to increase that payment now to $2,500, and the clients can't make that. And first thing I tell them is, go get some homeowners insurance, and then they'll cancel that. And they just kind of neglect it. And it's really important that you maintain that homeowners insurance.
And it's easy. And I'll tell you, even if the cost is the same, go get your own insurance policy. Then you're at least protected properly.
Yeah,
right? It doesn't make any sense not to be.
It doesn't protect your personal property and
legal liability, anything like that. So.
Yep, absolutely. So I would certainly encourage people to make sure they get their homeowners insurance.
Now, before we went to break, we talked about that you're an author. So tell us about your book. It says Bankruptcy: Your Bridge to a Brighter Future.
And it's got a bridge in the background. Is that the Howard Frank? Oh no, that's the skyline.
That is the Skyway.
So the reason I have that picture is one of my passions and hobbies is fishing. And,
nice.
A lot of time I spend under or around that bridge fishing. And that's
a lot of sheephead out there.
That's sheep's head and mackerel. And I've actually caught grouper there. And
nice.
On last Christmas Day, I caught a nice-sized grouper. So, that's why I have the picture. But the reason I wrote that book really is just to provide people information on some, the basic questions that they ask. For example, can I keep my home? Can I keep my car?
Can I keep my jet?
Yeah, you could keep your jet in certain situations.
So you can keep your car, though, you were saying.
Yeah, most people are able to keep their car because most people, what I normally see is most people have car loans. Mm-hmm. There's usually not a lot of equity in a car because they probably owe what the car is worth. So in Chapter 7, in a lot of instances, they can completely keep their car, even if it's a new car or relatively new car. It's only when there's a lot of equity in a car that maybe it would become a problem in a Chapter 7. That might be a reason to look at a Chapter 13.
So let's say I don't have any equity, but I have a really nice car. We're talking one of these, six-figure type cars. I can still keep that under what you said, because, I'd like to keep driving the Maserati around.
Well,
I don't have one, but if I had one, I'd certainly like to keep it.
I haven't had anybody who's ever filed a bankruptcy who's had a Maserati.
Fair enough.
But I have had a client who had a Rolls Royce.
Really?
So yeah,
nice.
But
did he get to keep?
It was an older one.
Didn't get to keep that.
He did get to keep it. Actually,
Really?
He did get to keep it. It was an older one, and I think he did file Chapter 13 though, so he was able to keep that.
Okay.
But generally, like I said. Most people don't $100,000 cars are coming to my office to file a bankruptcy. It just doesn't happen.
Hopefully they're sharp enough not to get to that point, right?
No. So
It's the people with the $100,000 TVs that file bankruptcy.
Well,
$100,000 TVs.
I hadn't seen something like that, but if I did,
You should read the reviews online for the really expensive
my
TVs.
eyes probably can't handle it.
Most of these people are honest debtors, and they're really not, they don't have $100,000 TVs or cars, and they're hardworking people. And like I said, people have unexpected, really hard times.
Yeah.
And speaking of this being everyday normal people, there's a shame factor with just the thought of filing bankruptcy. How do you coach people through the what are my friends going to say? What are my family going to think? How do you get people around that?
There's actually a chapter in my book that I wrote about that. But the shorter answer is that anybody can suffer a severe hardship in their life, and it could put a huge financial stress on them. Nobody should really look at another individual and look down upon them because they've had that. And most of these people, like I said, they're honest. Hardworking person has been working for a company for 30 years, shows up, does a great job, and all because of a company's decision to change the way they're doing things, lays that person off, and it just throws their finances in a tizzy.
Yeah, anything like that.
Or they're showing up to work and they go to the doctor and have a little bit of pain and they have a serious tumor or something like that, and they have to deal with that, and they can't work, and they have to deal with their medical problems.
Do you think that is probably what's most common is people that are not necessarily living paycheck to paycheck, but we're only one paycheck ahead, right? And then something happens and it snowballs.
A lot of people are just one paycheck ahead in our community, and one of these things can really throw things off. And it's not that these people don't mean well; everybody wants to pay their bills, and it's embarrassing, but. If your neighbor's looking, down upon you,
probably not a very good neighbor in the first place, right? So, we were talking, speaking of wages and that kind of stuff, wage garnishments. If I file a bankruptcy, does that stop that, or how does that work?
Yeah, absolutely. As soon as a bankruptcy is filed, the day I file a bankruptcy, I file something with the state court telling them that you filed bankruptcy. And we let the employer know and the creditor know. And the creditor actually has a duty immediately to have that wage garnishment stopped.
Now, if you're going to have a wage garnishment, is that something that you know about before they do it? Or is it just one day they're going to call HR and say, hey, you have to do this because of X, Y, Z?
It happens pretty quickly.
Okay.
It happens pretty quickly. The employer gets served with a notice of a wage garnishment, and then you're given a copy. And you have the right to object to it under certain circumstances if you're a head of household. But that comes after the lawsuit and after the judgment.
So you're sued before a wage garnishment even comes.
Except for student loans, federal student loans. They can serve you with a wage garnishment without a lawsuit. except for the IRS. They can serve your employer with a wage garnishment. But other creditors, they have to sue you and get that judgment first.
Do you see student loans as far as being a huge issue with bankruptcies?
Student loans is the biggest debt of facing our country. There's, I think, what was it, $1.5 trillion or $1 trillion in debt. It's more than the credit cards that people owe. It's a huge problem, and in fact, the bankruptcy court just started a new process or procedure where if you file a Chapter 13 bankruptcy, or even I think a Chapter 7 bankruptcy, this just started, I think effective September 1st, you can actually, there's a portal where you can kind of negotiate with your student loans to try and get what's called income-based repayment plans, or somehow manage that student loan. It's a huge problem facing our country. Obviously, that's what the debates were about. Half the debates, if we watched the presidential debates recently, that's what half of those debates were about, student loans. It's a problem, and it's becoming more and more of a problem because interest rates are going up, debt's getting higher, and so yes.
I just remember late 90s, early 2000s, the credit card companies were preying on the students. They were setting up, like, here, get a free backpack, sign up for a credit card. It's like, it was amazing how much debt they tried to put onto the students. And then with all of these colleges and stuff, with them being for profit, they're selling paper more than they're selling the career path of the future. So yeah, it doesn't surprise me. Student debt is what it is, and it's just really high and stuff. So if I'm an employer and I find out my employee is filed for bankruptcy, am I allowed to terminate the employee if I run sensitive information, or if the employee is like, I mean, my business is a little different because I have employees going in and out of people's homes all the time, and there may or may not be people there. So if I know someone's filed for bankruptcy, that's a risk as an employer.
I've been doing this for 28 years. I have yet to hear of a client who actually got fired for filing a bankruptcy by an employer. There is a provision in the bankruptcy code that prohibits discrimination by employers for filing bankruptcy, but as a practical matter, it just doesn't really happen. And usually, what employers are looking for when they're hiring somebody is they're looking at their credit, and if they have a lot of debt, that could potentially affect them. And I've literally had recruiters, Army or Navy recruiters, or recruiters bring people in my office, young people who have a lot of debt for some reason, and get them to file bankruptcy before they're actually signing on, because they don't want them to have to deal with that. So the important thing might be just to get rid of the debt before looking for the job, rather than because the employers are worried that they're going to have to manage that debt while they're working. So as a practical matter, employers aren't firing people for filing bankruptcy. That just doesn't really happen.
Might just not get hired.
They may not, if they look at their credit report. That's why it's a good idea to deal with the debt as soon as possible. Don't put it off. And that's why I was saying timing is really important, and putting off dealing with your debts is usually the worst thing that you can do, because you're just creating more and more problems for yourself down the line.
I think it's interesting that you said the recruiters come to you. So do you think they're going to, excuse me, for a second thought I had to sneeze there. Sorry about that. But do you think they're trying to go into the military so they can maybe it's a better opportunity for them so they can pay off the debts? Is that part of what they're doing there, do you think?
I don't know. I think it's just that, I guess the recruiters are just looking at their credit report, and, they're saying that's potentially a barrier for them signing on with them.
Adam's getting all emotional over here. I know you can see it on the video. Make sure you we now say, instead of press, now smash the like button on our YouTube channel. We want it smashed because you're using your sausage fingers on the phones. So make sure you smash that like button if you're watching us on the YouTubes or the Facebook Lives. Again, this is Leo Kane with Barrel Engineering and Inspection. We've got Adam Talley with Talley Insurance, and Robert M. Geller with the law offices of Robert M. Geller.
Who'd have thought?
I just love how law firms get to name their firms after themselves. It's just
well,
awesome.
We are Charles D. Talley Jr. Insurance Incorporated, so
but I'm not Leo Kane Engineering.
You could be.
I could be, but I'm not. When we come back, we only have one last segment. I can't believe we've already been on the air for an hour and 45 minutes.
That's too soon.
And now the AC is cranking here in the studio. Got a couple of listings we're going to talk about. We're learning all about debt resolution and surprising facts about bankruptcy. I love this. And there's a book. He's a published author. We'll be right back after the break. Well, good morning. Welcome back. This is Tampa Home Talk. Leo Kane with Barrel Engineering and Inspection, Adam Talley with Talley Insurance, and Robert M. Geller with the law offices of Robert M. Geller. I understand you have, 3 other attorneys working for you?
Yeah, we have. I have 3 other attorneys. One that's been with me for over 20 years, Frank Papa, and Senid Hamad, and Tyra Salahuddin, and Young Associates. Those 2, they're great. They help cover my 2 other offices. We have our main office is in Tampa. That's where Bankruptcy Court is. We have one also in St. Pete.
And then you said you're going to hire me for the one in Playa del Carmen. You said was there?
In Puerto Vallarta. In Puerto Vallarta.
Okay.
Yeah. So
Playa del Carmen is the other side of the country.
Heaven
the
forbid.
other side. So where the big bay is. So.
Okay, fair enough. Well, I call dibs on all Mexican operations. I can run that.
Puerto Vallarta
I can run that shop for you.
Puerto Vallarta is the great white shark pupping grounds.
Ooh.
And Playa del Carmen is the great white shark mating grounds.
Ah, I see.
I didn't know that.
Yes.
Oh, really? That's
Interesting.
interesting.
I'm full of useless
I was
trivia.
about to say.
I'll make sure
First,
not to go in the water next time I'm there.
It's our first useless bit of information of the day. You lasted.
I know.
Almost.
Well,
almost
actually, I
all
actually from
the
Shark
entire
Week
time.
last week, and I don't want to get too far off track, but I did learn about Reunion Island, which is about 500 to 600 miles east of New Zealand, being the largest bull shark population of the mega bull sharks, and it's all because the humans are how they're cleaning the water and doing their freshwater runoff into the ocean. It's attracting all the bull sharks because they like the brackish water.
Well, speaking of sharks, those creditors can be sharks sometimes.
Great way to reel me in.
Yeah, no
reel
problem.
me in.
And so, Robert, after we come to you, you've beaten away all those creditors, all those sharks, so to speak. Now, what happens after the bankruptcy's over? Well, how does my life start getting back together? I guess.
So what we do, once somebody gets their discharge, we sign them up for a program called 7 Steps to a 720 credit score. And we provide this to all our clients. We pay for it, $1,000 a month. We pay for this for our clients. And what it does is it teaches them how to rebuild their credit, so that within a period of usually 12 to 24 months, if they do the right things, they can rebuild their credit. Things that they do is they get a small secured credit card, and they use it and they pay it off, and they use it again and they pay it off. Or maybe they go to a credit union and get a small secured loan and they pay that off. So it helps them boost up their credit score. The other thing that they can do is we want to review their credit report. I don't know if you guys know this, but about 25% of the credit reports are not accurate after filing a bankruptcy.
Interesting.
So we want them to get their credit report, and we review it with them. And if the creditors are still reporting that they owe money, then we teach them how to dispute that. And then if the creditors don't correct the credit report, then you
beat them up.
We find a good way to handle it.
I was just saying,
Let's
we
just
teach
say
the
that.
creditors. I'm just
In the
imagining them
court.
standing there with a little stick. It's time to remove that credit report.
we would sue them for actually continuing to collect the debt after filing a bankruptcy.
Well, and I have a question for you. It brings me up to, I guess, a side question that we should have asked in the beginning. But, let's say I come to you and I think bankruptcy is right for me, but maybe it's not, right? Maybe I can do this a different way just by being, I don't know, maybe smarter, maybe being advised. Is that something you do? Like if somebody comes to you and go, I don't think this is right for you, or how does that work?
Well,
or does that not happen? Usually they're so far gone,
It does happen.
Okay.
There are people that we say that we can't help, or bankruptcy is not the right thing. We have people come in our office who owe, a very small amount and make good income, and I would recommend filing bankruptcy.
Spending habits, and they're fine,
Chapter
right?
13 is a 5-year process, so it's a relatively big tool to do. So it has to be the right thing to do. I don't want to, file a Chapter 13 if somebody's a little behind on their car and the creditor's coming after them to collect on just to get the car. Usually that's not enough to do it.
Yeah.
We tell them, well, maybe there's another way. Or what I do when I have a consultation with the client is I go through their options. And, one of their options is borrow money, maybe borrow money from a family member, although that usually creates more problems, and then you don't talk to
Gotta
the
be
family
careful.
member.
Is that a loan or a gift at that point?
Yeah,
That's
well,
the real question.
Well, usually I ask my clients, yeah, but if your dad or mom is completely loaded, and 25,000 is a drop in the bucket, maybe that's a better option to file bankruptcy.
Are these people adopting? Do you know? These
Yeah,
people?
no. or then there's always the lottery option. You can play the lottery. I always say that to them. No,
ill-advised.
Seriously. I mean, so I say you can maybe borrow. That might be an option, although it's not really usually a great one. Or you can, in certain situations, go to credit consolidation as another option, because bankruptcy may not be the right answer. You may end up having to pay all the debt back, or you may have a lot of assets. I have people come in my office and they have a consultation, and they have 3 properties that are free and clear, and they maybe owe $50,000 and they have $400,000 or $500,000 equity in properties. Well, I don't know that bankruptcy is a good idea. Maybe sell a property and pay off the debt. That's usually another option. But for the large part, most of these people, when they're coming to my office, they procrastinated.
It's time.
And I won't say they procrastinated. They've done what they can or what they thought is best, but maybe they should have come in earlier. And I would encourage them to come in earlier.
It's never
in
too
the process.
late, right?
Yes. But yeah, there are a lot of instances where they shouldn't file bankruptcy. We go over those options as well.
Now, how long after I've filed bankruptcy can I buy a house again? How long does that usually
Usually
take?
within 2 years. 2 years. And I have clients that are buying homes in the middle of a Chapter 13. I just got done with 2 clients getting court approved to purchase a home just recently.
How does that work? Or are they just downgrading that it's, or is it?
My understanding, and I talk to I have clients that are mortgage brokers, but generally what the mortgage companies are looking for in a Chapter 13 is they're looking for a year of payments to a trustee, continuous on-time payments. If it's after a Chapter 7, usually it's 2 years that they can get conventional financing. I think that's what the FHA rules are. It's usually 2 years after the bankruptcy discharge. So yeah, you can buy a home. People do rebuild. I've been doing this a long time. I've filed bankruptcies, unfortunately, for people more than once, where they've done very well, and they've had a major medical thing that's given them a new setback. And usually the question they ask me is, well, can I rebuild? And I say, well, just look at what you've been able to do from the last time.
Yeah.
So yes, people rebuild all the time.
Wonderful. Well, thank you so much for joining us. This has been Robert Geller with the law offices of Robert Geller for all your bankruptcy needs. We do want to end the show sending our condolences out to Jodine Carr and her family, and also Katrina and Sarah Crickey. They've all been friends for a very long time. Jodine's been, she used to work with the show. She's been a friend of a show for a long time. So shout out to her and her family. Obviously, our thoughts and prayers, and we're thinking about her as our day goes on today. So thank you for joining us, and we hope everybody has a good weekend. And again, this has been Tampa Home Talk. Love where you live, or we'll fix it. Thank you.
Thank you.
Thank you.
The